doing business in Africa. You can't afford to be without Africa Investor.
Welcome back, ladies and gentlemen. Our next session is hosted by Hubert Danzo of Africa Investor, and it's around the roundtable for Africa Asset Owner and the 5% Agenda on Infrastructure Co-Investment Platform. Hubert always hosts the most amazing conferences. I learned a lot, and the first time I met the NASP pension funds from the US was at Hubert's conference. So Hubert, I value your contribution in the space in terms of knowledge sharing that has happened in South Africa. And of course, you've taken African investors internationally as well. Before I hand over to you, and in the context of just the process of managing the day, I just want to inform people that after your session, there'll be a break from 10 to quarter to 11. And after that, they can then choose whatever topic they want to go into, different speakers, the pre-recorded session on the infrastructure development. So it's the series 1. You will then be able to choose whatever series you want to go into. And then after that, there'll be a combined question and answer that will be at 11:15. It will be hosted by Adre Smith. With just those few words, Hubert, I just want to hand over to you and look forward to learning. Thank you.
Thank you very much, Mabatu, and good morning, everybody. And on behalf of Africa Investor, it's a genuine pleasure to co-host this event with Batseta and welcome you to the Across Africa Asset Owner Roundtable on the 5% Infrastructure Investment Agenda and its co-investment platform. As Mabatu said, my name is Hubert Danso. I am the chairman of Africa Investor, the African Union's Continental Business Network, the CFA's Global Asset Owners Advisory Council out of New York, and I will be your chair for this roundtable dialogue. This particular dialogue on the African Union's 5% infrastructure investment allocation agenda, known as the 5% Agenda, is designed to provide the South African pension fund community and Batseta's global network of institutional investors with insights on the 5% Agenda, which is our African Asset Owner Partnership Compact with African heads of state to increase investment allocations to infrastructure as an investable asset class to at least 5% of assets under management under a new and more aligned institutional investor public partnership framework, IIPP, as used in Canada and Australia. The 5% Agenda cements and fosters a partnership dynamic between African pension and sovereign funds to partner governments to structure projects and programs so they better align with asset owners' investment policy statements and mandates and facilitate co-investments and create that better linkage and utility with domestic and global capital markets for the asset class. The African Union's Agenda 2063, which we'll also be covering, known by its slogan, "The Africa We Want," is Africa's equivalent and complement to the Sustainable Development Goals, which also incorporate very strong ESG principles and aligns with South Africa's Developmental Investing Agenda and Regulation 28. Today's theme builds on our long-standing infrastructure investment partnership with Batseta, to promote infrastructure as an investable asset class. That's African infrastructure as an investable asset class. And today's theme also represents the outcome of the CBN and the African Sovereign Wealth and Pension Fund Leaders Forum COVID-19 consultative roundtables, which I co-chaired with Uche Orje from the Nigerian Sovereign Investment Authority that you'll be hearing from. And the focus of those roundtables really zeroed in on the role and response of African institutional investors to the COVID-19 pandemic, to which Batseta's leadership and members actively participated in. That consultation process led to the development of a comprehensive outcomes report entitled the African Investment Partnerships We Want report, The report is essentially our roadmap on economically future-proofing Africa through asset owner investment partnerships to build resilience for achieving the 5% agenda, the African Union's Agenda 2063, and the African Continental Free Trade Area against the backdrop of COVID-19. The forum's report, put together with the support of Riskura and Africa Investor Capital, is a very rich feast of over 200 asset owner investment partnership recommendations, 100 future-proofing initiatives, and 500 plus investment products. It's interestingly being dubbed as the African Asset Owners Statement of Interdependence, which is quite interesting. This particular seminal report really does symbolize the African investment community's choices in our own voices, and it really does represent our commitment and support for, as I mentioned earlier, the 5% infrastructure investment agenda, the $3.2 trillion African Continental Free Trade Area, and Agenda 2063. And joining me to provide insights on the 5% infrastructure investment agenda and co-investment partnerships more broadly, we have an elite and distinguished group of African and global institutional investment leaders, namely Mr. Uche Orji, who is the CEO of the Nigerian Sovereign Investment Authority, representing the continent's sovereign wealth fund community. We have Ngashia Kurungi, who is the executive head of the Kenyan Pension Fund Investment Consortium, KEPFIC, who is representing the pension fund community from the continent, giving that perspective. And then we have the infamous Nick Fursley, who is the Director General of the World Pensions Council, bringing the global pension fund community's perspective. And really, just to get this conversation going, I'm going to ask each of our speakers really just to give us their views on why African asset owner leadership and co-investments through the 5% infrastructure investment agenda is such a high priority for their organizations as well as the continent. And then, and within that, and within the 5% agenda's framework, as I mentioned, this institutional investor public partnership instrument, which creates that better alignment. It will be good to hear from each of you in the context of this opening question, how you're approaching asset owner partnerships with policymakers and regulators, pursuant to helping these allocations be geared towards, achieving the goals set out in Agenda 2063, and unlocking all of the impact that they can. And so let me turn to you first of all, Uche, for your views and response to that question. Then I'm going to go to Ngashia and then Nick. Over to you, Uche.
Good morning. Thank you very much, Hubert, and thank you everyone for being here. I will respond to your question about how we are working towards getting the 5% agenda to become a reality. And I think it's important everybody understands what the 5% agenda is, and that is to get asset allocation in Africa from 1.5%, which is a current low base, up to 5%. And to achieve that, there are quite a number of things that are needed. Number one is to have a supply of high quality assets into the market. Number two is mobilize domestic capital. To look at infrastructure as an investable asset class. Number three is the creation of a local currency guarantee scheme that I think is very essential. One of the biggest challenges, obviously, African countries are facing is the perception, and in most cases, and in some cases, correct, of the inability to pay when investments are made into infrastructure. Obviously, one of the questions I had somebody ask me a long time ago was, you're building a bridge. If I invest in it and I can't get paid, I'm not going to be able to take the bridge with me. So how do I make sure I get payment assurance? So these are some of the comments that I think are very valid and very clear. And they speak to the fact that capital markets are not yet mature in some ways to deal with this. And so part of the work we've done is to ensure that we can address all of these concerns. And so far, I think we're making some progress. And of course, the final thing that is important to address is how do you get us to invest across regions? Because the reality is that we have to come to a point where we see Africa not just as individual markets, but to some extent, where capital is available in one place and opportunity is in another place. Let's try and get that going. That, of course, is borne out in the data for trade, where intra-Africa trade is still sub 20%. I think it's about 17%, whereas intra-Europe trade is about 64%. So that speaks to some of the challenges and opportunities in moving capital within the continent. So these are some of the things that I believe have been identified as areas. So let's talk about the supply of assets. The supply of assets, the work we've done is to get governments to actually partner with us to create an easy path for public-private partnerships. So the creation of the Nigeria Sovereign Investment Authority has created an institution that has the ability to play both as a government-owned entity with private sector philosophy, because it's managing government capital in a private sector manner. So getting some of those assets to market have been proven a lot easier working with the NSI, and we're able to mobilize external investors into those assets. And we've done that in healthcare, we're doing that in roads, we're doing that in agriculture, we're doing that in gas industrialization, we're doing that in many other areas. Power, we're doing that, especially renewable energy. The mobilization of domestic capital has then become since then quite efficient. I mean, I was on a call just before this where we're talking about quantum of domestic capital in Nigeria. Obviously, there's a currency mismatch issue that's available and looking for these assets, where the pension funds allocation to infrastructure is even below that 1.5% in a country like Nigeria. So that mobilization is the role we're playing, whereby having this intermediary agency like ours, giving comfort to both sides, is actually making it easier for us to see our domestic pension fund market coming into the market, into infrastructure. And one of the institutions we created that has helped us was Infrastructure Credit Guarantee Company Limited, InfraCredit. It was sponsored by the NSIA, co-developed with Garantco out of the UK, and we have AFC, Age, and NSIA as the owners of this entity. And what it's doing is actually providing local currency guarantees. And that is now beginning to see pension funds use that as a way to get into the market. And then finally, intra-Africa investments, very important. We've been in all sorts of conversations, I'm sure we can tell you more about that, to see how we can get partnerships across South Africa, Nigeria, and then across the various parts of the continent where we can provide comfort for each of us to invest in across our different markets. So I'll stop here because this is generally what is possible. Asset supply can be made possible, and high quality asset supply with institutions like ours as co-investors. We can mobilize domestic capital, there's a lot of it, and then also provide local currency guarantees through the institutions that we've created. And then finally, getting across everybody in the continent to play a part together in getting this done. It can be done. And I think that we are starting to see the benefits of that effort. But without a doubt, it's a long way to go to get to where we should be. But I'll pause here and hand it back to you. Thank you.
Thank you very much, Uche, for really setting the scenes and giving your perspectives there. You rightfully pointed out the low levels of intra-African trade that precipitated the establishment of the African Continental Free Trade Area. I think you said something like 17 odd percent. And I do applaud not only the work that you've provided into framing and establishing the 5% agenda, but also the African presidents and the respective ministers of finance that are supporting its implementation. Because if 17% intra-African trade is a challenge, then how about 5% intra-African investment flows? You mentioned some of the sort of numbers out there of other regions around the world. If you look at Europe, for example, intra-European investment, as recorded by the OECD, is in the region of 82%. So, there's a real catalytic role for us to play as the institutional investment and asset owner community to take advantage of that dynamic. But I just want to stay with you, just one little follow-up on the institutional investor-public partnership, because it's an interesting mechanism in terms of the partnership with the African Union and heads of state, which in many respects has averted any sense or conversation around prescription in Africa, because it really does demonstrate to our regulators and our public sector colleagues that as the asset owner community of pension and sovereign funds, we are more than interested and more than committed to participate and support, allocations into infrastructure. It's just that there hasn't been the framework has been more aligned to development finance partners and the provision of debt, as opposed to us as asset owners providing long-term equity. So maybe you can just give a couple of examples about how you've actually worked with government to be able to structure those projects under that sort of institutional investor public partnership framework.
Sure. And you raise all the right points. I think the first thing is getting government beyond just providing the asset, but also to put equity on the table and actually provide a substantial amount of equity. I got reminded about a toll road that was built in Russia. It was the first PPP for toll roads in Russia, where the government actually put up 90% of the capital. And somebody asked them a question: why did you want the government to put up this much capital? And the government said that, was supported as saying that for that 10% of private capital, it actually made sure the project got done and within budget, right? So governments, depending on risk perceptions, should be encouraged to provide as much support as possible, because there are just so many other things that private sector investment do. But in our case, it's ranged. In healthcare, for example, private participants and ourselves obviously took almost the entire cash equity, but the government provided the asset and the base. On roads that we're working on at the moment, the capital structure is somewhere around 40%, 30 to 40% government, 60% ourselves and other investors. So those are the kind of numbers. And again, it all depends on the quality of the risk that people believe they are taking. So that's number one. Number two is actually having the conversations and ensuring that things are done properly to meet international standards, from the tendering process to the pricing process, all of that stuff, right? So we can make sure that that gets done. So this is something that takes time. But it's a conversation worth having. And quite frankly, I'm quite encouraged by the number of African sovereign wealth funds, which many of them play different roles, from sovereign development to playing the role of being the intermediary, the honest broker between government and the rest of the world, in being able to facilitate these discussions. Because what we've noticed is that conversations tend to break down very quickly if you're 100% private sector company negotiating with government. So there's a lot of smoothing out of the rough edges of the transaction dynamics that actually will play as a role. And then, so finally, obviously, is making sure the payment assurances happen. Because part of the challenges people face is sometimes, can you actually have the conversation to get payment assurances to happen? So I'm not saying that what we're doing is the best way to do it, but I'm just trying to illustrate how we're trying to address more of the concerns that people have. And then finally, of course, I keep talking about this vehicle created. It sounded like a science project, but eventually it's work now. InfraCredit, and their job is to ensure that there is a guarantee structure that has, other counter guarantee providers. And once you build these institutions, you'll be surprised as to how much response and support you get from everywhere else. And so this is something we have found particularly compelling in our work. So you're asking me, how did we get this done? This is really how we got it done. But start first. And then you start to see real capital flowing into this market. Now, to intra-African investment, I just hate to even imagine what that number is. Maybe laughably low. But you and I have
5%, Uche.
Yes, that's the target, right? So, but the point is that we've spoken about where you have competitive advantage in South Africa and Nigeria being married together. That's something that is very important. We can do the same thing across various parts of Africa. And I think once we start to look beyond the barriers because it's easier for a Nigerian entity to have a discussion with a European entity than for a Nigerian entity to pick up the phone and call a Gabonese entity and say, hey, let's talk about this. And this is something that I think we need to change, because that way we can actually create a fluid Africa capital market structure for infrastructure.
Fantastic. Thank you, Uche. And you struck on it. The importance of partnerships and us coming together. The framework of the 5% agenda, and the fact that we've got so many African heads of state and ministers of finance working directly with our sovereign funds and our pension funds on the ground is, very useful. And I think that whole consortium and collaborative approach, I think, can be very well illustrated by Ngashia in Kenya through the KEPFIC consortium. So over to you, Ngashia, with the same question to give us your context on the 5% agenda, why it's so important to pension funds in Kenya and East Africa, and then examples of how you're actually already beginning to work with governments to avert potential conversations around prescription or really potentially misunderstanding the real commitment and interest from the pension fund community in Kenya to invest in infrastructure when, of course, there's perfect alignment to do so. Over to you.
Sure. Thank you, Hubert, and thank you all for having us here. Let me start off by maybe just introducing KEPFIC, or the Kenya Pension Fund Investment Consortium, KEPFIC in short, for those who don't know. We are a consortium of prominent Kenyan retirement benefits funds that have come together to make long-term infrastructure and alternative asset investments in the region. In the search for optimal returns, our pension funds, like those the world over, continue to scout for profitable and impactful investment opportunities. And while most pension funds have traditionally invested in government securities, blue chip equities, investments in infrastructure and other alternative asset classes really present a new, profitable and long-term sustainable opportunity for us. In terms of what we look at, or why we decided to go down this route, we looked at infrastructure as providing an attractive return profile, potential portfolio diversification benefits, and obviously the matching of long-term assets to long-term liabilities. And over the next 5 years, we target to mobilize over $250 million from the Kenyan pension funds, as well as from offshore co-investors to invest in impactful infrastructure assets. Now, if we speak Kenya specific in terms of the opportunity set, so Kenya faces a significant infrastructure financing deficit. I think it's estimated to be approximately $2 billion annually. And that's a deficit that cannot be met by public resources alone. So historically, infrastructure investment has been the domain of national and county governments. There is a significant opportunity currently for the private sector to participate as more private capital seeks long-term steady returns. At the same time, governments are being faced with much needed competing priorities. I think the obvious one right now is healthcare, given the COVID-19 pandemic, but you can add others like, education, for example. So infrastructure represents an attractive yet underutilized investment opportunity for pension funds in our country and in the continent as a whole. And the involvement of our private institutions will lead not only to greater contribution to the continent and Kenya's economic transformation and growth as a whole, but something that's really important, it will also lead to better project governance structures via the use of global best practices. Now, when we look at the 5% agenda, for us, we are, I like that, Hubert, you said 5% and you made it clear that that's the minimum. For us, we have engaged our regulator on this initiative and successfully passed a recent provision under our investment guidelines, which allow pension funds now to invest up to 10% of their assets into infrastructure. And this will effectively unlock over, we estimate over $1 billion in investment into this asset class. We are very aware that given the novelty of the asset class, one focus we need to have is the development of pipeline. And so for pipeline development, we are working hand in hand with the government, primarily through the PPP unit, which is the Public-Private Partnership Unit. And we're working closely with them to assess their pipeline and to ensure that it better aligns with our members' investment policy statements, and that the structure in which these investments or these transactions have been put together are conducive for the flow of private capital into them. So, there are lots of interesting opportunities we're looking at right now, opportunities that have a cross-continental theme or element, be it by using contractors and professionals from all around the continent in our own infrastructure, as well as our own professionals, our own large players that are looking to participate in the development in other African countries. Back to you, Hubert.
Yeah, thank you very much, Ngasha. That's giving real practical expression to the 5% agenda, and then drilling down to that key instrument, the institutional investor-public partnership framework, which was actually just coined out of the Australian model, where the pension fund community in Australia came together and sat with government and said, look, we'd love to be able to do more, but the way that you structure a number of your transactions make it very difficult for us to regard them as investable or bankable, and to discharge our fiduciary responsibility to be able to take those decisions. How about we look at a partnership that we keep it a PPP, but we call it a pensions public partnership. And again, that just sort of lends itself to a framework that enables a much better alignment of a collaboration between asset owners being able to help government structure the transactions to be able to meet the risk-adjusted return thoughts, criteria, and approach. And I know, Nick, that you, from the global pension fund community side, are very au fait, not only with the 5% agenda, but also this institutional investor-public partnership model. So looking forward to your views. Over to you, Nick.
Thank you, Hubert. And what I heard from my esteemed SWF and pension colleagues was music to my ears. It's really great to see that these things are happening right now across the continent. It's actually a great achievement. And if anything, the past 6-7 months, is that horrible COVID-19 crisis, it hasn't slowed, that momentum. So really, I'm really impressed when I speak, to policymakers or asset owners across the continent. And of course, Kenya and Nigeria and South Africa, have been at the forefront in many ways of that revolution. And one of the reasons that Kenya and Nigeria have been at the forefront, and South Africa is also playing a great part, is these countries have one thing in common. They have a strong domestic institutional asset owners base. So in Nigeria's case, it's mostly sovereign wealth funds. In Kenya's case, it's mostly pension funds and insurance companies. In South Africa, it's mostly pension funds. And that's great, because when you have a strong domestic national asset owners base, that's something you can build on. And I think it's a lesson for many nations, not only for nations across Africa, but also even in the West, so even in Europe or in the Americas. Not all countries are created equal, and not all countries have such a strong domestic asset owners base. It may be due to British colonialism. So one of the few good impacts of British colonialism in Africa is that Kenya, Nigeria, and South Africa were left with these beautiful pension and then sovereign systems, and it's a great thing to build upon. Let me start and by saying that I'm very optimistic about the 5% agenda. I'm very optimistic about the growth potential of the African economy as a whole. And I think if you're an investor, if you are an asset owner sitting in a cubicle in Montreal or Toronto or Sydney, you tend to look at the world with basically the eyes of an actuary, right? And so the actuaries tend to be boring and gray-haired and conservative, but this is how they look at the world. And so they see potential returns, so they see money coming from the investment in Africa, but also they see risk. And the problem is, the shallow news flow sometimes tends to exaggerate these risks that are there in Africa, but these country risks are there in each and every country, not only in Africa, and they have to do with fiscal risk, devaluation, monetary risk, capital repatriation, the fact that investors need to see independent judicial powers and independent tribunal to make sure that their property right, when they invest in a highway or a bridge, or an airport in Kenya or Tanzania, they want to be sure that if something goes wrong 15, 20 years later, and if they have to go and sue the government or sue a certain municipality or region, or in that country, that the judge there will treat them fairly, and their property rights as foreign investors are really sacrosanct, are sacred in the eyes of the local policymakers and the local citizenry. So all that taken together, I think the picture for Africa is really great. And I think what Africa can do and what Africa is doing now is turning its so-called weaknesses into strength. And what do I mean by that? You know, there's a very high injustice, and it's due to the biases that we have, we in the West, we in the Northern Hemisphere. You know, most asset owners, most pension funds, most sovereign funds, most banks, most asset management companies, they use something called indices. So they don't invest in stocks and bonds like that. You know, before investing in any asset, domestically, locally, or abroad, these big pension funds in Europe and Canada and the US, they will have a benchmark. So it's an index, and they will use that index, investment index, to build their global portfolio. And sadly, for historic reasons, the business of creating these indices is an oligopoly. So you have, you know, one or two companies, and they're both Anglo-American, and they have like a 99% market share. So it's not a very democratic or transparent business. And the main one is called, you know, MSCI. So it used to be a subsidiary of Morgan Stanley. And with all due respect, so if you look at the main index used by investors the world over to invest globally, it's called the MSCI All Country World Index. So that's really the gold standard, the benchmark. And many pension funds will use it, even in Africa, sadly. Many pension funds will use that, the MSCI All Country World Index, to put money in different markets and different nations. And if you look deeply at that index, you see that mechanically, the index encourages you to allocate 55% of your overall portfolio to US assets, US equity. And it also, the same index, forces you or incites you or strongly encourages you to allocate 8 or 9% of your overall portfolio to Japanese equity or Japanese assets. Now, if you look in reality, look at the real world, look at, you know, what we call as economists, purchasing power parity. The size of the US economy today is 14 or 15%. The size of the Japanese economy today is like 3 or 4%. So clearly the index is a reflection of the past. It's a reflection of the liquidity on listed markets, because, you know, the stock exchange in Johannesburg, the stock exchange in Casablanca is a reflection of the size of the Moroccan or the South African economy from 10, 15 years ago. So it's fairly small, it's fairly illiquid. And that's why the Morgan Stanley and the other indices, they tell you, oh, you should allocate more to the US, etc. But what does it mean that divergence between the real world, you know, the real world where emerging markets, African economies are starting to rise, but the indices, which are telling investors to invest in Africa and emerging markets based on information from 10, 15 years ago, right? So it's really unfair. It's clearly a bias, you know, against emerging markets, and it's sucking up, basically, it's sucking up much needed capital away from Asia, Africa, and Latin America, and it's encouraging investors, pension funds, to invest more than they should in the US, the UK, and Japan. And so as usual, sadly, Africa is the most discriminated against, because if you look at these big indices like the MSCI, you know, global indices like the MSCI World Index, Africa represents like 0.8%, so less than 1% allocated to the most rapidly growing continent. So it's really unfair. And if you look today in PPP terms, today Africa represents more than 5% of the world economy. So the deconnection, you know, between the size of the economy in real terms and the size of money that many investors are allocating is unjust. Now, I really wanted to start with the pessimistic part, and now I'm going to switch to the optimistic part. So this is what's going on now. On the flip side, many sophisticated investors are realizing that. So I'm not the only one, you know, like St. John the Baptist preaching in the desert. So many investors, many policy thinkers are starting progressively, things move very slowly, to realize that. And so in Montreal, in Vancouver, in South Africa itself, people are saying, wait a minute, you know, why am I allocating, you know, 55% to the US economy? It's risky, let me diversify more and let me move away from that old-fashioned, simplistic, index. It's happening right now. And Hubert mentioned, these large, sophisticated Australian, Canadian pension funds. You could say they are at the forefront of that. It's an emancipation. So they're breaking the chains of the indices. And it's no coincidence that the same large, sophisticated Canadian, Australian pension funds who are moving away from these old-fashioned indices are also the ones who, in general, tend to invest more in private equity and infrastructure. It's not a coincidence. It's linked to the same idea. So if you emancipate yourself from these indices, you look at the world differently. So you invest more in so-called illiquid asset classes like infrastructure and private equity, and you also invest more in emerging markets and in Africa, because you start to understand that these indices are highly biased. And if smart money is starting to realize that. And I think that's something that Africa has really going. Another thing that Africa is going for itself, and I think it's great news for private equity and infrastructure across the continent, is leapfrogging. Because the size of these national listed stock markets is small, it's true. So MSCI is not completely stupid. so they have a point. The stock exchange in most African countries, relative to the size of the African economy or national economy, is small. So by investing directly into infrastructure, into private equity, it's a way of getting rid of that limitation. You go and buy companies, you go and buy airports, you go and invest in high-speed rail in Ghana, you go and invest in gas mains in Uganda. It's a way of getting rid of the limitation of the listed stock exchange. So I think many investors are starting to realize that, and that's why it's the beginning. You're starting to see a lot of the Northern Hemisphere cash-rich investors coming to Africa. And I think one last point that Africa has going for her is really your initiative, because by putting your money where your mouth is, by seeing that leading sovereign funds and pension funds from these African nations themselves, they're putting their own money into highways, high-speed rail, renewable energy. It's sending a very strong message to these Northern Hemisphere investors. They say, if the Minister of Finance and his advisors themselves, their own pension pot is partly invested in that highway or that airport in Kenya, maybe it's great, because it means that they wouldn't invest their own money or their own future retirement in a silly asset class. So it's reassuring also, very reassuring for the Northern Hemisphere pension funds to see that the Africans themselves are coming together and putting more of their own money into African infrastructure.
Fantastic. Thank you very much for that, Nick. I think, there are many things that we are seeking to accomplish with the 5% agenda, and addressing some of the reprehensible social injustices that have happened to us through the likes of colonialization, which is reprehensive, and some of the counter, problems that we have now with the bias and discrimination in certain global markets, intentionally or unintentionally, based on the way that some of these products is constituted, sort of just goes back to the same thing. We, as asset owners on the continent, have a very important leadership role to play, and I think this is a very strategic and important way to accomplish that. And Uche mentioned very clearly that the pipeline is a big issue. Ngasha mentioned that, you've mentioned that, because ultimately it comes down to being able to responsibly, add the asset class to your strategy, and then identify, vet, and deploy capital to qualifying opportunities. Now, within South Africa, and we're talking to predominantly a 500 plus South African pension fund audience and community right this moment. And I think a number of the colleagues from the retirement and the pension fund industry are asking themselves, but what are and where are these partnership opportunities for us to be able to collaborate and move forward? So my next question is really directed to, again, each of you. And we really want to get your views on what, in your view, are the specific investment opportunities that are in line with the types of risks and opportunities that can be pursued by South African pension funds, along with your own institutions or your own investment community. And I suppose just added to that, in the spirit of the institutional investor public partnership model, would you feel that where there's a stronger partnership between South African pension funds and government to actually structure transactions around some form of developmental investing or ESG or SDG linked agenda, that will be more attractive for your institutions and the broader market, more directly? So we'll go now to Uche Ngasha, and then we'll end up with Nick. Over to you, Uche.
Sure. Thank you, Hubert. I think I'll just keep it very brief, 30 seconds. There are quite a number of things that Nigeria brings that South Africa needs to work with us on. The first is the aspect of industrialization. And Hubert and I have talked about this extensively, and I think it's very important that we work together on this. A lot of the industrial needs in Africa have actually been solved in an efficient, low-cost manner by South African companies. What we need is to bring that capital together and we have growth opportunity for industrial entities. And I think this is one area where we can work with industrial parks to bring in the actual industrial entities into our environment. That's number one. Number two, obviously, is another key areas of infrastructure. Transportation infrastructure remains a viable sector in many ways, particularly on the port side. These are things that I believe are fairly important. So there is a fund that we're working on, which is an industrialization fund, which I think will be pitching to you to work with us on, which actually enables South African companies to come to Nigeria to do industrialization. I think this is really a little bit more value needed right now than anything else that is being done. Thank you.
Fantastic. Thank you very much, Uche. That's a clear, concrete opportunity when you have a $3.2 trillion African continental free trade area, a market as large as Nigeria, and opportunities for the government to actually co-invest in working with South African companies in Nigeria. That certainly sounds like a compelling proposition. Ngasha, I'm going to move over to you now for your views on opportunities in closing for South African pension funds to partner with Kenyan pension funds on investment opportunities in Kenya. Over to you, Ngasha.
Thank you. Let me start by Thank you. Let me start by just highlighting that one of the benefits of co-investment that in the manner we are doing is that it helps de-risk potential offshore partners. Let's remember one of the biggest benefits of this co-investment that we are doing here in Kenya by bringing the pension funds together is that it's a very strong signal to offshore potential co-investors that local capital is actually putting its money where its mouth is. Yeah, and that provides a strong de-risking element. It provides a strong de-risking element for outside investors. In terms of the live opportunities, I would say we have a number in the country. One that would be particularly interesting for South African investors are those that is one that has a South African element to it. And a good example is the Lamu Port development, where the government of Kenya has proposed a program to develop the Lamu Port under what is called the LAPSET program, which is Lamu Port, South Sudan, Ethiopia Transit Corridor, and it's to accelerate economic development within the region. And the first part of this program is a new 32-berth port in Lamu, and the whole value of it is approximately $5 billion.
Thank you very much, Ngasha. I received loud and clear. But in closing, as I think I was about to allude to, we've got some very concrete opportunities for the 5% agenda and co-investment partnerships between asset owners on and across the continent. So we've heard about a South Africa, Nigeria industrialization fund to take full advantage of the $3.2 trillion African continental free trade area. There are private credit as well as a lot of other strategic bankable and investable opportunities within that. So that's excellent. We've heard about the Lamu port with Transnet, with local pension fund investment going into that. Again, another interesting co-investment opportunity. If Nick would have spoken, he would have talked about the positive global response to the 5% agenda, which is what he and his World Pension Fund Council have coined the 1% agenda. So for every 5%, for the continent reaching 5% of assets allocated to infrastructure, there's a global pool of $100+ trillion of assets that could legitimately invest in the region of 1% into African infrastructure, which would have a very meaningful impact as part of our post-COVID stimulus and to chip away at our $100+ billion per annum infrastructure deficit. So with that said, I'd like to thank BATSETA and you all for being such a great audience. And I'm now going to turn it back to Mabatu, wishing you all a very productive rest of conference, everybody. Thank you very much.
Thank you. Thank you. Thanks.
Thank you so much, Hubert, to you and your panelists. I think there was just so much insight that we can learn from, similarities, differences, and lessons learned.
Doing business in Africa. You can't afford to be without Africa Investor.